Hey, what's up, guys? Node Investor here. See, we've got some folks in the chat room already. We'll go ahead and get started here in another minute or two. Hopefully you can see the screen now. Selling strategies is going to be the topic today. So we're going to be talking about how do you sell, some things I look at, some signals, some potential strategies you can use, and some of my thoughts around that. So we get some folks in the chat here. So here's what I would like to do. If you're in the chats, I'm going to go ahead and be monitoring questions. So during this selling strategies portion, if you have questions, try to keep it to this portion of the topic, and I'll try to get through it in about 20 minutes. And then after that, I'll go ahead and open it up, and we can look at anything you guys want to look at. So fair warning right now, I noticed Coinigy's down right now, and I sent them an email earlier this morning and logged a ticket, and they said they were aware. So we'll have to use TradingView, no big deal. But I was hoping to use Coinigy, just easier for me to search some of those things, but it's all good. So if you got questions, just keep them coming. So we'll go ahead and get started. Before we get started, first off, I just want to say personal thanks to each and every one of you. So all of you that are on this call, I sent you an email because you have taken the course or purchased a course, and I see you're in Coinigy now. Cool, I'll check it out. And you have purchased a course, and I just want to say thank you sincerely. I've gotten a lot of good feedback. I know some of you guys are learning some good stuff from that. And just want to throw this out. I'm looking at a couple of different options for potential new courses or advanced training or expanding the content there. Not sure which way I'm going to go yet. Maybe I'll do some webinars or some paid training, or maybe some mini courses covering some specific topics. So just some thoughts. If you guys have any ideas or any specific topics you want to look at, let me know. I'm thinking maybe doing like some more deep dive on like Fibonacci or moving averages or advanced candlestick reading or something. So just those are some thoughts I'm looking at. So, all right, well, let's get to it. So selling strategies, right? This is a good question to always be asking. How do you take profits? When do you take profits? Or do you move out of the way if something's not working? And that's what I want to help cover here a little bit this morning or this evening, depending on where you're at. So first, some ground rules. Remember your time frame, and you have to know before you go into a position or a trade, what is your strategy, right? Are you a day trader? Are you a swing trader, or are you more of a long-term holder? Is this going to be a core position in your portfolio, or are you just making a quick trade, maybe a day or two, and just going to capture some quick profits? Because depending on your strategy, different selling rules apply. And so just kind of know what your intentions are going in. And sometimes, admittedly, you'll go in with the expectation of maybe a swing trade and ends up being a longer term hold. That's okay, but just kind of have some predetermined going in. Never let your losers run. And by that, I mean, if you make a trade or an investment, you have to have some predetermined target or a plan to when you're going to get out. I mean, don't ever be in a position where you're down 50, 60, 70%, especially in the cryptocurrency space, because they don't always come back. This is such a new industry, a new market, that you have to treat these almost like if you're investing in a startup business. And a lot of them are going to win and a lot of them won't, or they may take a long time to really come back. So just keep that in mind. Have a plan, and everyone has a different tolerance. And again, it depends on what your strategy is. If you're a longer term holder, yeah, you can give it more room to the downside if you're a short term trader. But the point is, just don't compound losses, right? Forget your ego, swallow your pride, and don't get emotionally attached. I know some people will say, oh, I really love this one, and I'm gonna hold XYZ token forever, and it's my favorite. And if you're investing for a profit or capitalizing on the gains, which I believe most of you are, then try not to get emotionally attached. And I get it. That's easier said than done, right? We're talking about money and capital and stuff, but don't get married to one of these things. Just take it for what it is. And if it's not working, it's not working. If you're in this for more of a philosophical reason, and I get that, there's some of those projects where you really believe, that's a different story. But what I'm talking about here is trading and investing. Don't beat yourself up over mistakes and losses. I mean, we all take losses and you will make mistakes. It's just a matter of when. Just keep learning. That's the important part. Continue to learn, try to figure out what you could have done different or better. Something to remember, when you're in a weaker market, like we were in June and July, sell sooner, meaning take your profits quicker, keep your stops a little tighter, don't let them run away, because surprises in a weak market are typically to the downside. And vice versa, when you're in a strong bull market like we are right now, hold longer. Don't be so quick to jump out of a trade and take your little gain, right? If it's up 20%, because it could go up 50%, 70%, 100%. I mean, we're seeing these right now with Omise Go, and we're seeing it with, you just saw it with Neo and with some of these other ones that are just really strong. So hold longer in stronger markets. So you can summarize this by saying take your losses quick and your profits slow. And this is very hard for the average investor to do, because most of the time they'll hold on to their losses longer than they should, and they'll kind of hope that it turns around and sell at a better price, and they'll just keep making more losses, and then they'll sell profits quickly instead of holding on to the strong ones and the leaders that are working really well. They'll not want to lose every profit they've made and they sell. So try to reverse that. All right, so strategy 1, selling into strength. And so what this means is you sell before you see it turning around. So you never know the exact top, but there's some signals that you can look at to start maybe taking some profits or locking in some gains, or at the very minimum, maybe putting in a stop or a trailing stop or something if it's available. So the first one would be a big green candle after an extended run, not before, because before it's typically a breakout or a signal to buy. But when you're already up, 50, 60, 70%, 100%, and then you see that big green candle at the top, that's typically a sign of an exhaustion purchase, exhaustion buying at the top. And at the very least, it's going to pause after something like that. It may not just crash and correct, but it may pause. So at least be aware and be alert after you start seeing those big moves up. The thing with those big green candles is you can have a couple of them after a while. So, you can have, after a big move up, you can have maybe 2 or 3 in a row. So you just never know where the top is. And so what I'll tend to do is, if I have a big position, maybe I'll sell part of it into one of those big candles and see where it goes from there. Another one is an upper channel break. So when you see this nice steady climb, just very parallel channel, right? There's an upper trend line and a lower trend line, and they're just moving up very nicely over the course of a couple days or weeks. And then at the very top, you see it just pop out and really take off. Assuming there's no big news or something that's driving the project drastically, usually that's another sell signal. That's a sign of exhaustion. And I tend to start looking at selling at that point, or taking some profits at the minimum when you see those upper channel breaks. Another one is a climax run, right? So that's similar to the big green candle at the top, but this is parabolic, right? This is where it goes up hundreds of percents in a day or two after a move up. So at that point, typically it's done, but you just never know where it's going to end. So if you can use a trailing stop there, those are good, because you want to catch as much of that run as possible. And then the other one is if it's very extended beyond some of the shorter term moving averages. So in this case, a 10 EMA, like on a 4-hour chart or a daily chart, typically is a little extended. Or if the RSIs are 80 plus. Now, the RSI is a little more reliable on longer term time frames, like a daily or even a 4-hour, because on the shorter terms, if you're looking at the hourly charts or less, these RSIs are going to go from one extreme to the other pretty frequently. So that's not really a good sell signal. But if you zoom out and start looking at the daily chart and the RSI just starts climbing, it's not a sell signal per se, but it's kind of like a red flag or a yellow flag. Start being on alert that it's maybe getting a little extended. But RSIs can stay at extreme levels for quite some time before it corrects, and I'll show you some examples. So let's go take a look at the charts here. Let me see if CoinInky is working, because I was really hoping to use that. It was not letting me find anything here earlier today. Doesn't look like it's working. Yeah. Well, hold on. Maybe it's working now. Okay, good. Perfect. So let's look at Neo. Everyone's talking Neo here. So this right now is giving us very good examples. Let me load my settings here. And so, as you guys know, I've been a fan of Neo for a long time. And those of you that have enjoyed the ride since $7 or $8, congrats. You've been on this one. So here's what I was doing, right? So here's the big green candle I was talking about. And yesterday I started taking some profit selling into this. Now, long term, I'm a huge fan of Neo. I think it's got some great potential. But, near term, yeah, it's a little due for a pause. And so I was taking some profits. So what I mean by the big green candle at the end of a move, I mean, we've already been up at this point before that 156%. And then at the end, you see this big green candle, which takes it up to 300+%. And the volume starts coming in. And this is after a nice extended move. And typically that's kind of the mini climactic run. It's not climactic like this one was, right? This was a big climax type of run, but it's still a little bit of an exhaustion. And so at the very minimum, you're going to see some backfilling in here. And look at how far extended it was from the 10 EMA. I mean, on the daily chart, if you look at the 10 period moving average, at the top of this candle, we were 70% above that. That's very extended. And then you look at the RSI. RSI was 88. Now, remember what I said about RSI. It doesn't necessarily mean that it's a sell signal, but it's just a confirmation. Because if you go back here, you can see how high RSI got here. It was as high as like 95, 96. And it was over 80. Where was that? Right here. So it was already over 80 here. And if you would have sold on that level, you would have missed, 400% to the upside. So you don't necessarily take that as a sell signal, but you kind of be on alert there. And this was just a big, nice little climax run over in early June on Neo. But what we're seeing here is not as drastic, but you're seeing a nice little exhaustion candle here. And so that's the big green candle. And at that point, it's a good idea to start selling into strength. And when you want to do that, you zoom in a little bit, start looking at the hourlies or the daily, the 2-hour candle or the 4. And, this is kind of this was my little signal right here, right, where you start seeing these. And you had one down here, so you could have been faked out. You could have seen this run pop, and then it did pause, but look at where it found support, right, the moving average, and then started another little run, another little pop. And maybe this one just finds support here or down here, and that's it, right? It doesn't necessarily mean that it crashes, but if you're trading it and you want to take some profits, those are the signals I look to. So that's selling into strength. So let's go to another one here. So responding to sell signals. So this is more where you start to see some weakness in the charts or some sort of sell signals. So big, heavy volume reversals. And so if you see a big red candle to the downside at the top of a move with huge volume coming in, at minimum, that should put you on alert. Doesn't necessarily mean jump out right away. You don't have to be that jumpy, but at minimum, you should be on alert and say, okay, where is it going to potentially pull back to, or maybe take some profits, right? So just kind of look at that. The other one is a big wick at the top of a candle. So it's volume reversal, but it doesn't necessarily turn red, but it's a lot of volume. And so we saw that yesterday in Stratus. So let me take a look at Stratus. And now this is a big wick candle. It's not exactly at the top of a move, so it doesn't really apply here, but it's a good example of a big wick candle. And so Stratus tried to break out yesterday and had just massive volume coming in. It was looking really good. This was actually a breakout level that I was looking at for Stratus. And look at the long wick on that candle. That's selling, because this is where they try to buy it and they took it as far as this point, but then it sold off. And so if you zoom in a little bit on the hourly, you can see that action. Here's another, the big wick at the top of the candle. That's all sellers. And then sure enough, it starts to pull in after that. So if you see these wicks at the top of a move, so after a long run and you start to see that, that's a big reversal candle. And you're going to want to at least pay attention and see if it holds. More often than not, though, that's really where it starts to sell off. And we saw some of those like in May, June on Ethereum, right? So we saw some of those big wicks. Let me see if I can find some of those here. Go to the daily. Let me see. It's probably not a good example on this one here, but I mean, you guys get the idea. So when you see these long ones, so like for example, off the bottom, we had this big rally and then a big wick, and at the minimum, they would just pause after that. They don't necessarily have to crash, but they tend to take a little bit of a pause. And so that's a sell signal that I look for. Another one is a failed breakout. So in this case, Stratus is a good example, right? It was setting up real nice, try to break out, didn't work. It's not necessarily a failed breakout at this point because it hasn't taken out the downside support. But if you had a cup and handle or a nice ascending triangle and it pops out on big volume and then just turns around quick and undercuts the breakout point, at that point, if you're in it, you bought the breakout. Not all breakouts work, so it's okay to take a loss or to tighten up your stop and give it a little bit of room to the downside, 5, 10%, whatever you're comfortable with. And then if it breaks that point, just get out of the way and wait for it to set up. Another one is to look for support levels, and there's two that I like, right? The trending level and then the horizontal, and then of course moving averages tend to act as good support. And so let's look at a good one here. So I mean, if you're an easy one here is like if you were in Ethereum, right, to riding this whole wave up, and you're finding these support levels, and you can draw them at different levels. I mean, if you want to be more conservative, you can say the longer term support was something like this, right? But in any case, whatever your ultimate support level is, if it starts to break below a support level, that's typically a signal that, hey, it's time to sell, or be on alert, or give it, a tight stop. In this case, a good support level was this 10 EMA. I mean, look at how Ethereum was just riding that 10 EMA almost the whole way up. I mean, just beautifully followed that moving average. It would dip below it, find support, just follow it, follow it, follow it. And then at the top, it really started to get below it, and then it started to act like resistance. It kept bouncing into the 10 EMA at that point. And so that's a signal, right? Support's been broken there. If you have a parallel channel, that's support. Another way to look at support is horizontal support. And so if you want to look at it this way, you can say, it's pulling in a little bit, but if it breaks, whatever, solid support was like right here. You could say, if it breaks this, I'm going to get out, or if it breaks up here, I'm going to get out. So, you just kind of find your support levels, but that's another way to look for is look for a break of horizontal support. But that's a sell signal, right? So when you see those support levels getting taken out, you should start lightening up or be cautious. And then a trend reversal. So if you've taken the course, you're familiar with the reversal patterns, double tops, head and shoulders, right? So you're looking at those type of things. And if you start seeing those patterns set up, it's not necessarily a sell signal by themselves, but you should start paying attention. You should really be looking for that potential break to the downside. What I tend to do, it depends on the pattern, like a head and shoulders pattern, depending on how big it is. If it's a big head and shoulders on the daily chart, typically I'm already out already because the second shoulder is already lower top, downtrend. If it's on a 4-hour chart, I'm not as bearish because the shorter the time frame, the smaller impact the pattern's going to have. And so like on a 1-hour chart, a head and shoulders pattern, you could probably see them all over the place, but they don't really mean a whole lot. You might see a temporary little pullback. So, but just look for those. If you see a big double top on a chart, that's a signal, right? Maybe it's exhausted. And typically a double top will be accompanied with a big wick candle or a heavy volume reversal. So there'll be multiple of these things lining up. You'll see trend lines taken out or moving averages taken out that coincide with the double top. So when you start seeing all this stuff line up, it's pretty good that it's going to start reversing or at least stay flat for a while. So responding to sell signals, so basically selling on weakness. And the third one and the last one is systematic selling. So this is just where you just take routine profits, right? And your sell targets are predetermined on the entry. So like if you're day trading, this works really good because you're not really looking to get those big bull runs. At this point, you're making some steady, regular gains. And so what you do is you'll set a target profit, a profit target of 20, 30%, whatever it is. Most traders will use ratios. So maybe like a 3-to-1 ratio, meaning if I'm going to take a 10% loss to the downside, I'm going to want a profit of 30% or more to the upside, right? And so you can do it that way. And so what you do is at that point, you take your trade, and when you're up 20% or 30%, you take your profit. Another way is you look at as it approaches prior resistance levels. So that could be usually a horizontal resistance line. So let's say you take a trade and it starts approaching the old all-time highs. More often than not, they pause at that point. And so that may be an area where you start taking profit if it approaches. And that could be more than 30%, right? So that just depends. And then the last one would be basing it on indicators. So you can say, hey, when the MACD hits 85 or 80 plus, I'm going to get out of the way, or excuse me, the RSI, or when the MACD moving averages reverse to the downside, I'm going to get out of the way, or if the Fibonacci ratio bounces to a certain point, then I'm taking profits. And so there's a lot of ways to do that. I played the Fibonacci bounce here really well on NEO early on, so I'll give you an example of that. That worked out nicely here. Let me pull it up. So NEO had that big run early this year, and then it had that pullback and then a bounce right here, right? So during this bounce, I set up a nice little trade using Fibonacci, and let me show you guys how we did that. And that was my target on the upside, right? I was liking NEO long term, but my intention was in this case just to trade it and let it settle out a little bit. But I wanted to capture that little bounce. Let me find that. Here it is. And so what you do with this is you set up the Fibonacci for the downside. And sorry about that. So what you do is you say, okay, from the top of that peak to the bottom of the pullback, that's your Fibonacci. And what you're doing is you're looking for how far can it bounce. And so in this case, my target was this 61.8 ratio, which was this line. And I thought when it hits anywhere in this zone, I'm going to take profits. And so what I did is I got in down here after this candle confirmed the downside, and my profit target was right here. And in this case, it worked out beautifully. I mean, it literally bounced almost to the line and then started to turn around, and that was the end of the move for a while, right? So look at that. And that was a decent move. It doesn't look like a lot, but if you got in here anywhere in this candle, I mean, that's a 70+% move on a bounce, and this was really over the course of 3 days. And so that was a nice little trade, and that's how you do it, right? So when you're setting up a profit, it's just more of a trade at that point, and you're just saying, hey, when it hits my target, I'm taking profits there. You could have also set it up for this lower ratio, the 32.8, but 61.8 is a very key ratio on Fibonacci. So that's one way to do it. Let me see, as it approaches major resistance. So one example would be, let's look at EOS. I was talking about EOS here recently as a potential trade. Not really working out yet, but let me see here. So if you did get on EOS, the way I would be playing this, let me zoom out on the dailies here. Sorry about that. My Coinage still acting a little odd here today. So horizontal resistance on a trade as a potential profit. And so let's say you get in here, right? Some of the potential horizontal resistance levels I'd be looking at is this point right here. And if it gets above that point there, and then, right? So those are potential targets. And those are nice moves, right? So let's say it does break out and you get in on this. The first target is, 15% up. Now, I think if it broke out, it'd get beyond that point. So I'd be looking at this target, and that's good 33% above you. And then at that point, 83% to the next one, right? And so those are some of the levels you could look at. So you can set your targets based on that. And that's just a systematic way of taking profit. You're just saying, when it gets to that point, I'm getting out. Or when it gets to that point, I'm getting out. Now, in this case, I'd be putting my target at this point. If it went above that, this next leg up would be a little bit harder to capture all of it. So that's just another way to take targets on horizontal resistance. Now, that only works when there's prior resistance. In the case of like NEO or some of these that are breaking into all-time highs, this doesn't apply, because once you're in all-time highs, there's just no way to tell where the next resistance is. Now, there's a lot of folks that will say, oh, I can do a measured move from the the size of the base and the inverted head and shoulders, or I can do Fibonacci ratios to the upside. And there's certainly merit to that. But when you're in all-time highs, strength begins strength, and there's just really no way to tell how far it will go. So at that point, I'm taking my cues from the price action. I'm just looking for climactic runs or trend breaks or big volume reversals. So that's kind of what I'm looking for at that point. All right, so I hope that helped. Let me see. I think that's the last one. So just to recap, the three strategies are: you can sell into strength, you can respond to sell signals on the charts, or you can just have some set targets and make it a little more systematic, and you just take your profits when you hit your targets. What I personally do is I will use the systematic selling probably the least. Now, if I'm doing a day trade or a short trade, this is probably the most handy, because I'll look at the chart and I'll say, hey, if it hits that point, I'm out. I'm good with my profits. But if I'm doing more of a swing, longer term trade or a hold, if it's like a core holding in my position, I'm just going to look at the charts, and I'm going to take my cues from the charts, because I want to take as much of the move up as possible. I'm not going to get out early, or try not to get out too early. So that's kind of what I do. All right, so that's good. Let me take a look at some of the questions on the chat, and we'll start to answer some of this here. So let's see here. Okay, so I appreciate the feedback on the potential courses. So advanced candlestick reading, that sounds good. Maybe I'll do one of those. How do I recognize volume reversals? Let's see if I can find one here. I mean, you know, Stratus was a big volume reversal, but it was more of a big wick candle. Let me think. What are some of the ones that really broke down here? I think NEM had a big volume reversal early on this year. Let's see if we can find something. Yeah, right here. This is a big volume reversal. So look at this chart of NEM. This was during that big first move up. And here what I'm going to do is I'm going to hide this RSI. So kind of broaden this up a little bit. So you can see we had this big run on NEM, and then you had this big green candle. So this would have been your first signal. Hey, this is a big green candle after a huge run, maybe getting out, extended from the moving averages. And this is on a daily, keep in mind, you know, so this is pretty extended. But then, and I know I hit the volume here, sorry about that. But then you see this big red candle that goes all the way up and then comes all the way down, and it closes red. And so it closes in the downside, and volume was huge there. It was almost as big as the volume on this big green candle. And so that's a sell signal there. And at that point, you know, it actually did go higher, but it could never break that old high. And so that's what you do, right? If you're getting out here because you see the volume reversal, or if you're putting your stops, because I mean, this could reverse, but then stop at this 10 EMA and then just keep going. You just never know. And so in this case, at the very least, you're just maybe being cautious. But if it can't break above this high that it tried to do on that volume reversal day, that's usually a bad sign. And it tried to again here, and then it was down. And actually on the 4-hour chart, this just ended up being a big double top. And so if you zoom out here, so you can see what it did. It just ended up putting it a big double top on the 4-hour chart. So, and that was it, right? That was your sell signal. And then the second top had these little wicks at the top, and it was just kind of downhill from there. So that's what I'd be looking for. Let me see here. Let me look through the questions here. One sec. Can you explain buy, sell limit orders? Yeah, so there's basically two types of orders, generally speaking. There's a market order and a limit order. And a market order is I will take the first price on the order book for my quantity. So if you want to buy 100 of something, the first 100 at any price, I'll take it. That's the market, right? So if there's a seller out there willing to sell you at some amount, right? And it's generally close to the first few sell orders, but there are cases where market orders get filled at a much higher price. So what I do is I always use limits. but I will put the ceiling above where I want to get it in at, just to give it some wiggle room so it gets filled right away. And so a limit order says I will buy 100 of these up to this point. So let's say on the case of NEM, you wanted to buy 100 NEM at no more than 9,000 Satoshi, then you would put a limit order in for like 9,010 or 9,001 or whatever, right? So, and you might get filled below it, but not above your limit order. And that's how those work. So when you're putting in a stop, you want your limit order to have a little bit of a wiggle room, because yeah, when there's momentum to the downside, if it's moving fast, you're not going to get filled. And so what I tend to do is, if I use a stop, let's say I wanted to get out at 7,000, if it broke below that, then I would put my stop order at 7, and then I would put my limit order below that. So maybe 6,900 or something, just to see if it gets filled. How much room you give it depends on the one you're trading. If it's something like Bitcoin or Ethereum that just trades massive volume, you don't have to give it that much room because there's enough liquidity. If it's something that only trades $1 million a day, you've got to give it a lot more room because you might not get filled. So those are limits, market orders there. All right. Let me look here. How many coins are you actively looking? Because there's too much to cover them all. Absolutely, there's too many to cover them all. So typically, I keep my watch list small. At any one time, my portfolio maybe has 6, 8, maybe 10 in it. But I like to keep it small. I like to keep focused, and I pick the best ones that I like at the moment. I don't like to have like 20 in my basket. That's just way too many. And in fact, my watch list doesn't even have 20. I tend to just watch the leaders, and I like to keep it to a few, maybe 10 to 12, maybe 15 on my watch list. Now, periodically, maybe weekly or every few days, I'll go through a broader range, right? I'll kind of peruse the top 20 or 30 or see what's moving, just to see if I need to add something to my watch list. But I'm not going through the whole top 100 every day. No way. I'm just sticking to some of the leaders, right? So I'm looking at the top 10 or 15 at any one time. Obviously, the big three I'm watching all the time: Bitcoin, Ethereum, Litecoin. And then from there, it just depends on what I'm into at the moment, and I'll be watching those. Is there a best time of the day to analyze, or is it 24/7? Yeah, this market is 24/7, unfortunately. There's slower periods, but just whatever works for you. And it just depends on the token. Sometimes the Asian markets are hot, and other times European markets are hot. So it just depends on the time and the token. Just whatever works for you. I don't really have a set schedule. Sometimes I'll do maybe. Depends on how active the market is. If the market's crazy, like right now, it's just strong bull, maybe I'll do morning and then an evening, and you'll tend to catch some of those breakouts early. How do you protect positions when you go to bed? It depends on the ones that I'm looking at, right? If it's something that's more of a core holding, I'm not really too worried. If it's something that's more of a speculative trade or just a shorter term trade, depending on how fast it's moving or how the chart's setting up, I might put in a stop or maybe lighten up, but I try not to worry about it too much, especially when we're in a bull market. Now, May and June, everything was kind of heading down, and yeah, you just never know. The surprises are always to the downside in that case. So you just got to be a little more conservative there. If you go on vacation, right, you always got to figure out, okay, what am I going to do? Maybe get something a little more slower moving. All right, let me see here. What else am I looking at? So, question: when looking for double tops and bottoms, is there a rule of thumb on the charts to be looking for them? 1 hour, 2 hour dailies? Very good question. When looking for double tops and double bottoms, don't use the 1 hour chart or the 2 hour charts unless you're just doing some day trading or some shorter, swing trades like 1 or 2 days. If you're trying to ride something for most of the way up, those really don't matter because you're going to see double tops all over the place on a 1 hour chart. You want to look at 4 hour or daily charts for some of those key patterns. So in this case, on the screen here, I've got NEM. This is a 4 hour chart, and you can see the double top takes place over a number of days. When it's that big of a double top, it's more of a stronger pattern and most likely to resolve in a big move to the downside. On a daily chart or hourly chart, or excuse me, on an hour and 1 hour chart, you know, you can see double tops all over the place, right? You saw one here, but that really didn't do anything. You know, you see a little mini inverted head and shoulder here, and that worked out. But these aren't the big moves, right? These aren't the big moves that I like this, right? And so on the bigger the time frame, the stronger the pattern. And so that's what I typically do as a rule of thumb. So again, it depends on your trade. If you're day trading, then it makes sense. But if but at that point, you're just in it for a shorter, small profit on the day, and that's it. But if trying to capture the big moves, hold. Don't sell on every little double top you see on the 1 hour chart. All right. Do I trade on alts, BCC, or USD, or both? Both, but BTC is kind of been my core base right now, because the question is always, is my money better off just being parked in Bitcoin and being a little quote unquote stable, or is something outperforming Bitcoin and I'd rather be in those altcoins? And so that's why I'm looking at a lot of this versus BTC. But I do like to look at it at the USD level occasionally too. So I do both, and you'll notice on my videos, like for example, I'm talking Litecoin, and I'll typically look at it on the dollar level. But then you want to compare it against Bitcoin, because you're looking at it, how's it performing against Bitcoin? And in the case of Litecoin, you're better off being in Bitcoin or Ethereum, because Litecoin's just been underperforming. But if you look at it on the dollar basis, it doesn't look bad. But if you look at it on BTC, just underperforming, right? So in this case, you're better off just being in Bitcoin or something else, some other altcoin. And so that's why I look at both. But some people find it a little bit easier to look at it in some fiat bases here, and that's fine. But you just got to keep that in mind: is, hey, Bitcoin's rocking and Litecoin's going up, but just not as fast. All right, so let me see here. When do longer moving averages, some of 50 or 200, apply? So in the crypto space, we're just such a fast moving market. I never use a 200 ever. In stocks, all the time, right? 50, 100, 200. In the cryptocurrencies, they don't even matter, to be honest. I do the 50. And so in this case, right, I have 3 lines on my charts, and this is the blue one is this 10 EMA, the 30 EMA, and then the standard 50. And those are the 3 that I use. And on the shorter term charts, the 50 comes in pretty handy. On the longer term chart, it just depends, right? So in this case, the 50 is moving up, catches up, but then there's cases where it's just moving so fast, the 50 is not really relevant on the longer term chart. So in the case of NEO, you look at the recent action, right? 50 is all the way down here, just kind of irrelevant at this point, right? Everything's following the 10. If you zoom in a little bit to the 2 hour or the 4 hour, then it starts to make a little bit more sense, because you can see where they tend to pause, where it all consolidates right here. So in here, the 50. So it just depends on your time frame. But beyond the 50, I don't really use anything bigger than that. So I have not found it helpful for me personally. All right, let me see. I'm going to keep going here, and then we'll look at some more charts. Question: how do you research on chart changes, and therefore which coins keep on? Is there a good place to show the overall picture of the market? CoinMarketCap.com is probably my go-to. Just I kind of see the broader picture from that perspective, see what the coin market cap, total market cap's doing, see what's moving on a 24% basis, and then I'll go from there into the charts or other venues. And I did a video on how to research cryptocurrency, and so you can find that on YouTube. And I talked about, I use YouTube for fundamentals. I do CoinMarketCap. I go to the website. I mentioned CoinGecko, a couple other sites you can use when you're doing some research there. Let me see here. On sell on strength, if there is a huge green candle, as you said, it's either volume buying or due to some news. What source of news would you pick to check that is quick to update? I would go to Twitter and search for the particular token and see what people are talking about it. And if that doesn't show up there, then Google some news, but typically like the news, right? Websites, blogs, they're slower and a little, they're not going to post something right away. So maybe Twitter or Reddit or something. Just got to be careful though, because some of those sometimes can be a little rumor mill type-ish. So, unless you're familiar with the news or if you already know the story that's coming out, just respond to the charts. So I like to say that at the end of the day, price and volume action trumps everything for me. I mean, I use indicators, I use moving averages. Those are a little bit of a lagging. Certainly news, I give the least amount of weight to, but price and volume action is number one. What do you think about market scanners? I don't know. I don't really use market scanners. I am the market scanner. I just got to find what I'm looking for. Yeah, I don't know. I don't use them. Yeah, a lot of exchanges have Ethereum as a default. And I like that. I like that they have that. I personally don't use it a whole lot. The only time I would use something like that, and this is just me, if I am heavy in Ethereum or if I've got a big core Ethereum position and I'm looking to trade another one of these alts or maybe an ERC20 token versus Ethereum, then you'll use the Ethereum base to see if it's outperforming Ethereum. So, in the case of NEO, it doesn't really apply, but here you can say, in this run, you're better off being in NEO than you are in Ethereum, and here it's underperforming Ethereum, right? So that's when you'll use it. But me, I'm just using BTC as my core base and then fiat. All right, let's see here. So what duration of trade should we be in? Seems like your trades catch the price. Just holding Bitcoin. I'm not sure I understand the question. And I guess, like I said at the beginning, when you're doing your sell strategies, you have to know what your goals and investment style are. Some folks are building core positions and being a little more longer term hold, meaning they're doing months, right? Longer trades, or they're trying to ride the wave until the general market turns around. Other folks are more day traders trying to capture short-term profits. So it just really depends on your style. Everyone has a different goal, a different objective. If you're, if you're busy and you're working full time, you can't look at charts all day, then the day trading style is probably not going to be too valuable. You're going to probably want to catch some more swings, the longer term, where you don't have to be looking at the charts a lot. So it just depends. I hope that answers the question there. How do you look at something like Civic? It's so new. Yeah, so Civic. So I've been on Civic here, and we'll look at the charts. And those, you got to take a look at the smaller term charts, right? So you do your research, you look at the project. If you like the project, the fundamentals, daily charts aren't going to help you on Civic. So you're kind of looking at the shorter term. So here is a 2-hour chart. You can even do the 1-hour chart. And so like yesterday, we had the big pop on Civic, took it up 100 or something percent, 80%. And then I started watching this, right? And this is more of a shorter term trade for me, but I'm, in it may turn into a longer term hold if it keeps working. But at this point, I saw this little setup here and it looked good on the shorter term chart. And this is what I was looking at. It was building up, moving averages was catching up. And this was my signal, right? This little green bar starts popping above. And you see a pretty decent move after that. So even if you got in at the top of that bar, you were up as much as 59% again. And right now you're up around 45%. So you got to take the shorter time frames on something like that, just because they're moving so fast and they're really new. All right, let's see. I'm going to look through some of these questions. Oh, good question. Thank you for reminding me. Yes, these notes will be available. So the notes I just covered, I'm going to link to my website right after this. So they will be available. It'll be a PDF for you guys to download. How do I analyze coins for long-term holdings? You just do a lot of research. You find the team. You figure out. I do things like supply. And so how much total supply is going to be made, or if it's unlimited, what's the inflation rate? what's currently available, who's holding in, right? If it's like 2 people holding 25% of it, that's a red flag. So I look at supply base. I look at what the project is, what kind of competition there are. A lot of it is guesswork, right? Can the team pull it off, right? You just never know, but you try to do as much research. You find interviews with the founder or the team devs. You do a lot of that. Check out their website, see what kind of advisors or backers they have, what investors are looking at it. So I do a lot of that. And like in the case of Neo, right, I know I sound like a broken record, but through the month of July, I was just talking about it a lot because it just reminded me of Ethereum, right? It was just like, this has some big potential, and this is not going to be a little one-time pop that it did in May or June or whatever when it came out. And so I was looking at it closely and setting it up and did more research. So those are the type of things you look at. And at that point, yeah, you're thinking, okay, what's the long term, you know? And at the time I started mentioning it, it was probably like 350 million market cap. And I'm thinking, even if it's worth a tenth of Ethereum, you know, you're looking at 1.82 billion at least, maybe higher, right? So that's how I look at those. And I'm thinking, okay, based on supply, this thing's going to be $50 or $70 or whatever. And it's 7 now. So maybe a good buy. That's how I look at those. Now, there's always risk. You just never know. And there's so many of them. So it's kind of hard to do the research on all of them. So we're just going to have to pick some. Oh, let's see here. Litecoin. Yeah, Litecoin's walking into walls, man. Litecoin, yeah, it's just underperforming. That's all I can say. It's just not working right now. Oof, that looks ugly. Hold on. Yeah, so this is Litecoin versus BTC. You know, I had this little double top here. And I gotta say, Litecoin during the correction was this, right? It was beautiful. It was the place to be. And I had a large portion of my portfolio in Litecoin, probably close to 60% at one point. But once the market started to reverse and things bottomed out, I mean, it just started to underperform. That was your signal to kind of just start looking at other places to move into. And right now it's still underperforming. I mean, I'm not saying anything bad about the project, but it's just the money's just moving out of Litecoin from a BTC basis. You know, on a dollar basis, it's not bad. It's trying to get above this 47. It really needs to get above 47 and back into the 50s if we're going to see it do anything else. Yeah, Charlie Lee. Oh, no comment. I like the guy, but yeah. All right, let's see what else are we looking at here. Do I tend to avoid ICOs? Most of the time, especially recently, just because everyone's got an ICO for everything nowadays, and a lot of the ICOs that I get hit up on, a lot of the times the team's really new to blockchain or doesn't really know what it is, or if it doesn't make sense to me, you know, an ICO for something that I don't even think is blockchain related, then yeah, I just tend to avoid them. I like to see things mature a little bit and control the capital more, right? So instead of locking up some coin for a longer term period. But you know, you can make out on ICOs. I just think there's an influx of them right now, and everyone's got an ICO for everything. So you got to be a lot more picky on which ones you want to get on if you're playing ICOs. Do I keep my alts holdings in exchanges, move in and out of daily? Yes and no. Sometimes I don't ever use just one exchange. I'll use several. And sometimes I'm moving in and out. It just depends on what the market's doing, how fast it's moving, or what I'm in, right? If there's something that I'm a little bit more of my core holding, I'm going to ride it for a little bit longer, then yeah, I'll take it out and just kind of hold it. When is course 3? Yeah, that would be great. I'm thinking about that, right? Not sure yet. I'm thinking maybe more some mini courses that are a little more focused and a little more topical. So maybe a course on moving averages or advanced candlestick reading, or maybe a course on just Fibonacci or just RSI. So I'm thinking about those. And when I say course, maybe it's like an hour video or something. Yeah, GitHub's a good place to check for development and what the project is. Not everybody's familiar with GitHub, and if you're not familiar with programming and how GitHub works, it might not make sense to you, but that is a good source. And yeah, I do use GitHub. Do I ever regret selling something? FOMO. Yeah, that's a good question. So last night I mentioned this. Somebody said, hey, what was your best trade ever? And I said, probably Ethereum. And Ethereum was hands down my biggest percent gainer and maybe dollar gainer too. But I got lucky. I got in on Ethereum at, I think my first buy was around 12. Then it dipped on me, and then I got in at 8. But then I rode it very well up through here, saw these bases, added more on the bases, bought more, and just was riding it very nicely. But here's the thing on Ethereum is I saw this big move happening right here, and I sold a bunch of Ethereum, maybe 30% of my core holdings at about $170. And then I thought, oh, I did well. It came all the way down to 100, and then it went all the way back up to 400. So I did not regret that. For a day, I was like, oh, crap. I was kicking myself, right? Because then you're seeing at 400, I'm thinking, man, all those Ethereum at $400 would have been worth X, Y, Z. But you can't do that to yourself. If you're up and you make a decent profit, don't ever regret selling. Because what will happen is you'll get emotional, you'll jump in when you see it at the very top, and you'll probably make a bad trade. So don't get emotional. Now, if you make a mistake, hey, don't hesitate to get back in. I've done that before, where I'll take profits, I'll see it pop, and then I see it do one of these, and if it breaks out above the prior high, and I'm thinking this one's got more room to run, or if it starts to set up a little base, who cares if you get back in at this point, right? I mean, if you sold it here and you're going to get back in here, there's nothing wrong with that, right? So let's say you take profits here, you see this little base setting up, get back in. It's okay, so just try not to be emotional. Don't let your ego get out in the way, but don't panic buy either, right? If you're freaking out and you're like, oh, I sold and I'm trying to get back in, don't panic buy. I saw it happening yesterday with NEO, for example. I took some profits into the strength, and admittedly, it took a lot of discipline for me to not to buy back in when it kept going up a little bit more. So I'm going to zoom in on the hours. All right, so I was watching this, and I still have some NEO, so don't get me wrong, but I was seeing these candles at the top of the move, and I started taking a little bit of profits, and I sold some here, and I sold some here, and then I saw it popping up, and I was thinking, man, I got out way too early. But then it starts bouncing around. So at this point, I'm watching it thinking, hey, if it starts to break out again after this little consolidation, then I'm not going to be too proud to buy back in, right? But it didn't, and I was giving it some time, and now it's kind of pulling in a little bit. So now it's just more of a waiting game, watching it to the downside to see where potentially it could hold. This moving average is looking really good on the hourly, also correlates with this support level. But if you zoom out a little bit, you're breaking that to 10 EMA right now, so it could very well come down to this next level. But there's just a lot of demand for NEO right now, so it's going to be a strong one. I mean, I don't know how far it'll go, but I'm just going to wait, see what the signals show, and start buying back in here when it looks like it's reversing. Any advice for altcoins in the coming days? Advice as in potential buys or sells, or is the market going to crack? We're super strong right now, and we're in a bull market, and things are working. So until that changes, I don't know. I mean, I'm taking that each token at a time, and I'm looking at it that way. I mean, just generally, the market's in a bull market, and so it's working. Things are moving up. You might have to be cycling back and forth between different positions, but things are working. So as far as on the buy side, I mean, NEO, right? NEO's pulling in here. So look for a little setup or a new base on NEO in the coming days, maybe a little bit longer, depending on how long this consolidates here. It's kind of hard to say. So if you're in the newsletter, this week I sent out 10 that I was reviewing, right? So Bitcoin, Litecoin, Ethereum, NEO, NEM, IOTA, Stratus, Waves, and what else did I cover? EOS, Omisego. And so those are the ones I've been into lately. And I've also bought some Civic and some 10X here recently. So let's look at some of those, what they're doing. So 10X is still working, right? 10X is doing fine. It had this nice run up, and I looked at it after this little base. And so that's where I was buying it, and started breaking out above this. And the moving averages were catching up. And so that was my signal, right, to get on 10X. Right now it's working. It's a little extended here, so I'm not sure if I'd be picking it up just yet, but it's working. It's nice. Omise Go has been super strong, and I think I was talking about this one down here the first time, and it ran up, set up this nice little ascending pattern with a kind of a nice little cup and handle within it. And then just the other night, it broke out, and it's still going. It feels extended, but it's just nice. I mean, it's just super strong. Got this long wick candle right now, so maybe there's some profit taking happening around the $7 mark here, but that's kind of what I've been trading. So in coming days, I think these will continue to be the leaders, no doubt. So if you see another setup like this, another base, definitely take a look at some of those. I mean, that's what you look for, right? When something's this strong, they tend to keep running for longer than you think. So it has a nice run, sets up a base for 3 or 4 days, runs, sets up a base for 3 days. So that's what you want to see. You know, Mise Go is definitely one of those. So Mise Go, Neo, IOTA, already going. It's been going. So IOTA's looking really nice. And so the buy point was down here on the fork day, right? This little base that it broke out of. But, you know, it's giving you several opportunities, right? So it's kind of goes up, pulls in, holds the moving averages, goes up, pulls in. And so those are the ones I'm looking at right now. Let's see what else. We covered Civic. We covered, let's look at NEM. So NEM's one I've been watching, and I'm holding some NEM. And I'm really waiting for this guy to break out already, but it's not working yet. So look for NEM 2 ways here. On the downside, it's been trying to put in this little trend here. It looks like it's trying to now poke below it a little bit. So that's a little bit of a signal. It's not working yet, and it's bouncing into some resistance here. So if we can get a break above this level, maybe you'll finally see NEM break out. So if we zoom out a little bit on the daily, I mean, it's that level kind of correlates with some resistance that it's been hitting this longer term. This was key support that finally broke, and now it's acting as some major resistance. There's some good accumulation happening on NEM, though. If you look at the volume patterns, it's been pretty good. Don't want to let it get too far below. Right now, it's bouncing right off that 10 EMA on the daily. Personally, I probably wouldn't give it much more than these recent lows over here the last couple days. But if you can get above this level, that's going to be a nice little breakout on NEM. Am I looking at EOS? You know, I've been watching it. I'm not in EOS right now. It's kind of been doing nothing. So versus BTC, once it broke that lower support level I was watching, because it was holding this low very well, and then a couple days ago broke that, and that's kind of got out of the way at that point. So not doing a whole lot. If you look at the dollar level on EOS, let me zoom into the 4-hour chart. You know, it's just kind of range bound, right? It's really tight. So really not doing anything. I am watching it. Just the whole supply thing is probably putting some headwinds on Neo, and they're just releasing new tokens basically daily. So not a whole lot to do on this one right now. For traders with small accounts, you can't have many positions. And what do I think about just focusing on only 1 to 3 coins? I think that's a great idea. Maybe not just one, but yeah, if you've got a small account, don't go out and buy 10 coins, right? Just focus, pick, be very choosy, and don't try to get caught up in the FOMO, right? Don't see one pop and it goes up 100% and you sell what you have and then you jump on the next one and it pops, right? Pick one that's maybe just broken out and looks super strong. The trend is to the upside, and try to hold. And it doesn't hurt if you have some of the core ones like Bitcoin or Ethereum or something, right? So yeah, if you've got a small portfolio, try to keep it focused. Try to keep maybe just a few. Good question. Do I have a long-term versus short-term portfolio percentage? Yeah, it's probably about a third of my portfolio is in the short term. It just depends. You know, when it's a big traders market like it is right now, maybe I'll put a little bit more, but I'll watch it and it's a lot more work. But if it's kind of just things are a little steady, moving okay, I like to kind of keep the core holdings, right, in some of the big ones that I think will be big winners over the longer term. All right, let's keep going. What do we got here? How did I learn technical analysis? Over the course of many years, doing a lot of little bit of different everything, right? So I read a lot of books. I've taken seminars. I've taken webinars. I've taken courses. Um, I've done meetups. I'll do local stuff like that. I'll meet with other traders, investors. I learned initially in the precious metals and commodities markets, and I was trading futures and options. I was doing mining shares of stocks. Um, then I started doing more stocks. And one of my favorite methods or systems, if you will, is William O'Neill's IBD. And that teaches you a lot of base. Now, they do a lot of fundamental analysis for stocks and stuff like that, but just great, solid on sell strategies, solid on buying, how to short, how to do, just I learned a ton doing that stuff. So Investor's Business Daily and any of William O'Neill's books. Gil Morales has some good books, Pocket Pivots, just some more advanced techniques that are just fabulous. You can buy books on candlestick reading. You can buy books on certain indicators, and you kind of just figure out what works for you, right? I tried looking at a bunch of things, Elliott Wave, Bollinger Bands, money flows, all that. And at the end of the day, like I said, price, action, volume, those are the key. And then I'll use some of my favorite indicators like RSI or Fibonacci. I use MACD once in a while, but just not real big on it. Not that it's bad, but price and volume, moving averages, that'll get you most of the way there. And then you use indicators to kind of confirm, look for divergences, stuff like that. So that's how you just learn from trading. You'll learn faster if you're doing some paper trading or some mock portfolio, because it'll challenge you to see, to practice. The more practice you do, the better you're going to get at it. The more charts you look at, the better you're going to be able to recognize patterns and strength and weakness. And after a while, you see breakouts and you see what works and you see what doesn't. And it just kind of, you train your eye to it in a way where you can look at a chart real quick and say yay or nay. And it just helps you with your conviction when you make a buy, because you look at a chart and you say, oh, yep, that's going to go. That's breaking out. And I don't hesitate because you kind of just get trained on it. TradingView versus CoinAgee, which is clearer to chart on? I personally like CoinAgee just because it has a lot of the exchanges. But they're both good, and the charting itself is basically the same thing. I mean, they're the tools, the toolbar, and all that. It's the same thing. You see down here, this little symbol that says TradingView. That's basically the same thing. So I use both. TradingView is free, so you can use that. CoinAgee is a premium service after the free trial, but they're just a little bit different in terms of some of the features. But I use both. Personally, I just use CoinAgee lately. Let's see here. Do I like Qtum? I was on a tarmac in late July or mid-July in an airplane, stuck for an hour, and I started researching Qtum, and I did all this fundamental analysis on it. And at the time, I think it was like $4 or $5, and it caught my attention. And I thought, oh, this is pretty good. This is, kind of mobile platform, looks nice. And I did nothing with it. So didn't do anything. I know there's some issues around the founder and all that. So I just didn't do anything with it. Not that I don't have anything against it. It's just, you can't catch them all. And I was a little more focused, and so, but I did the research, and I think it's, technically speaking, the chart looks solid, right? It looks very strong. So, here in recent days, you've seen some reversals and some selling off, but a lot of stuff is doing that. Some profit taking is normal right now because we've had this huge run. I don't think it's a neo competitor personally. Two different spaces and other platforms and all that, but direct competitor neo, I think, is just got way more to offer than Qtum. Telegram chat. I've thought about it. It's just between the trading, between the website, the videos, Twitter, my emails, it's just hard. One more thing to keep up with and do. I don't know yet. I've thought about doing some sort of maybe premium trading room or something like that. Keeping it a little more private. So at this point, no, but that could change. Would day trading be a good way for traders with smaller portfolios to grow their portfolio. Yes and no. The thing with day trading, and I know people will argue this, there are periods in the market that it works very well and it's good to do, and there are times when you're just gonna trade too much and chop yourself up and lose little by little. Right now, it's good. Things are hot, so yeah, it's a good time to do that. Bounce around, kept some profits, but it kind of ebbs and flows, right? So it's good, but not every day. And some people try to force a trade every day, and there's just days when the market's just not tradable, nothing's setting up, and things aren't moving as fast and popping as much as they should. So don't try to force it. I don't trade directly through CoinAgy. I know you can set up your APIs and all that. I just go through the exchanges. Do I think technical analysis is self-fulfilling prophecy with all these rules? Sometimes, like Fibonacci, you kind of look at them and go, whoa, what the heck, right? But at the end of the day, technical analysis is just painting a picture of market psychology. And it's not so much self-fulfilling as much as it is confirming what's happening, right? So when you see these big volume reversals, that's people selling, right? And the markets are showing you that in a picture format. They're saying, look at, they tried to take it up and there was a lot of sellers, profit takings coming in. And, you know, it's a little bit of the crowd moving together, right? So you see traders seeing this, and then other folks are saying, I'm going to take profits too, and then I'm taking profits too. And then suddenly the buyers dry up and the sellers overpower the buyers, and you see this kind of happen. And yeah, a lot of traders do look at some key levels and key resistance and support levels, which is why a lot of these tend to work. So it's a little bit of both, but it's just a picture of market psychology. Yeah, looking for a mastermind, premium trading room. Yeah, I've thought about that. We'll see. All right, any charts you guys want me to look at? We're kind of running into time here. I'll keep going for a little bit, but we might have to wrap it up. Do I take profit into BTC or straight into fiat? It depends on what BTC is doing. Right now, nowadays, I go into BTC. When BTC was not acting nice in June, July, I might go into BTC temporarily and see what it was doing, but it just depends. But I don't usually go, you know, USD is good too. USDT Tether for short term. More often than not, I like to look for an alternative when I sell or something that's maybe setting up or looking to break out, and maybe I'll go into something like that. All right, let's look at a few charts here. Dash. Oh, Dash versus Bitcoin is still underperforming. And, you know, just it was looking really strong here, and just kind of after, you know, after the fork hasn't really done anything. So you can see this is August 1st and had some nice pops, but just still underperforming on the downtrend. Now, dollar-wise, it's not bad. Let me go to another one here. Where is it at? There it is. So you can see dollar-wise, I'll zoom out on the dailies here. It's not bad, but here, I'm going to reset my charts here. I'm going to show you guys a couple things on our side that I do. Yeah, Omise Go is looking good. Dash. So Dash, here's, let me go back to daily. So it's not bad. Moving averages are kind of still heading up. It's kind of little by little, but it's definitely underperforming, right? It's not made new highs. It's definitely underperforming. A lot of you guys have noticed on my RSI, you know, typically it's 70 and 30. So 70 is what they call quote unquote overbought. And I don't really like that term, but you know, that's kind of the upper limit. And then 30 is the lower limit. I do 60-40. Now I do pay attention to extremes. So like when RSI is hitting 80, 90 plus, I definitely make note of that. But what I like to do is there's this old, something I've been doing for a long time, and it's worked for me. And when something is in bull mode and it corrects, very rarely will it break the 40 level on the RSI on the longer term charts. And when something is in bull mode, it's also going above the 60. And in this case, look at Dash is just having a hard time getting over 60, right? And every time it rallies, it pops, the RSI hits 60 and it pulls in a little bit. So I'd like to see it pop above that. And vice versa, when something is in bear mode, it lives below the 40 and then it rallies, and the most it can get to is like 50 or 60 and then bounces down. So those are kind of key levels to look at as far as seeing if something is really strong or not. So looking at those, in the case of Neo, here's a good example, right? Okay, the RSI on Neo is well above the 60. So you can see it's been, since it broke out above 60 and just kind of been living above that. And if it corrects, very rarely goes down to the 40 level. So that's what I look at. Let's see what else we want to look at. Metal, yeah, metal's been running here. Let's see what metal looks like here. It looks like it's popping out here just in the last couple hours, really. So metal is nice. Would I be buying it? It just came back to that 10 EMA. If it pulls in a little bit, maybe a good way to look at it. So if it flattens out here and it pops out above this most recent high, probably another secondary entry point, but not bad on metal. All right, we're going to have to do a couple more, guys. Stocks, I don't have a comment on that one. It's kind of a newer one. Waves, let's take a look at waves. Let me see here. What we got? All right. One more here. So waves, waves looked like it was breaking out here right now. It's kind of pulling in a little bit. Again, looking weak on the RSI. So not sure about waves on this one. I know it had that nice double bottom. So you're going to want to see that breakout point hold. And we're basically right at that breakout point. And so this is a good place to look at waves. If you missed a breakout, if it starts to reverse off of this pullback, that might be a good place. But if it moves out, it seems to be having a little bit of trouble getting above this recent resistance. So if we can get above that, that'll be a good sign on waves, and we might see it move out again. Definitely one I've been watching. So let me look at the comments. I think that's going to be it for today, guys. I did look at a lot of charts in the call last night. So if you missed that, go look at that video. There's a ton of charts there. All right, guys. Appreciate you calling in. Talk to you later.